we are raising our fund 3. How's this journey going for you?
When I was a founder, I was maybe raising 6 months in a year. Now I'm raising 8 to 10 months in a year.
And there's a joke between us that it's been 9-10 years knowing you, and since the time we met, you have been raising funds.
In investing or as a founder, when you are taking riskier bets, your true nature gets exposed. So if you are a very fearful person, you can't see the money becoming to zero, then you should not become an investor. Working in a venture capital fund is overrated. So most folks are not prepared for it.
There are people who think that they can be careless when they are working with some other company because this is not their company, right? I think that kind of attitude won't serve you well in the long term.
Working as a VC fund is pure grunt work. Especially I see right today Gen Zs, which are recent 3-4 years of college graduates, they're not prepared for grunt work. Maybe after COVID, they have seen easy money and behavior got spoiled.
Hi everyone, I am Nansi, co-founder and head of marketing at Neon, and your host for today. And don't be disappointed, we have Siddhartha also joining the discussion here. So welcome to the show, Siddhartha.
Thank you, Nancy. Great to be on the other side.
So guys, as you know that after running our podcast for 2 years, we decided to invest in startups. And we thought that it would be the right start to our new journey. And the idea to work with the most ambitious set of people was very exciting. But the reality was way different than what we imagined. And considering our background and the exit we had, it was not an easy thing to get into investing, right? But fast forward to 2024, we have invested in 55 plus B2B SaaS startups. And we have a community of 140,000 ambitious people who want to leave their mark on the world. Yet, it feels that journey has just begun. There is a lot to do. There is a lot to learn. There are so many ambitious founders we have to meet. There are so many interesting startups we have to back. There is so much to learn and build. So in today's conversation, we will discuss how we are building Neon, what is happening inside the Indian VC space, especially in B2B startup ecosystem, and what's happening in our lives, and what are the other work we are doing respectively. So Siddharth, let's start.
Sure. Excited to be.
So Siddharth, we are raising our fund 3 for Neon, and we are meeting so many investors across the world day and night. How's this journey going for you?
I think it's almost like being equal to founder, or even the hard work required is more than a founder, because as a founder, you raise one investment and then for the next 2 years you deploy it, use your working capital, or try to make it profitable so you don't need money. But as a founder of a fund, you always need money to deploy into startups. So I would say like 60 to 80% of my time always goes in fundraising. So I think that's a different life change than a founder. When I was a founder, I was maybe raising 6 months in a year. Now I'm raising 8 to 10 months in a year. So that's one change. But I feel grateful to be doing it because recently, I traveled to Singapore for the first time, was there for 10 days, right? Met 30 folks across institution, family offices. Before that, I was in Middle East, in Qatar. Last year, I was in Dubai. And before that, like 2 months in the US. So this kind of learnings, this kind of exposure to vast variety of people, institutions, I couldn't have got that as a founder of a company. I could only have it as a venture capitalist investing into startups. So I'm grateful to have this opportunity, right?
Yes.
And then I know like the current environment is tough, but it'll take me like little longer to raise, right? In a fund 3 of 50 mil, we have already done the first close at 10 mil, invested already in fantastic second time founders in 5 companies, right? So the journey, I think, is just 10% done right now, as we have raised 20% of the fund and deployed in almost 10% of the companies that we want to eventually deploy in. And the remaining 40 mil that we want to raise, right, requires new relationships to get built, new connections to get built, new people to believe in us. I think that's the most important part. And I think when new people believe in you, magic happen, because these are the folks, right, that we don't know or we have known yet. And when they come with their networks, they come with their intellect, they come with everything that they have built on board, right? As we invest in startups, so these limited partners, future limited partners, invest in us.
And there's a joke between us that it's been 9-10 years knowing you, and since the time we met, you have been raising funds.
Yeah, first I have been raising for my own company, which you were a founding member of, and then we co-founders. I have been raising for the fund. So
What's the toughest thing about fundraising?
I think the toughest thing about fundraising is that as each scale of the fundraise, the fund gets bigger. The last fund was 10 million, and this fund is 50 million. So the last fund of 10 million took us almost 7 months to raise, and in this fund of 50 million, in the initial 4 to 6 months, we have been able to raise the 10 million for this fund. So what is unknown is uh, how much more time it'll take to raise, what are the new set of people that it's going to take to raise from, and at every new fundraise the quality of people and institutions is very different, right? From a last fundraise, people investing USD $100,000 or 80 lakh rupees per individual. In this fund, the minimum check that people are investing is $300,000 USD, and institutions are investing $1 million USD. And as we are talking to more and more individual, family offices, fund of funds, and other institutions, I think uh, we are not yet fully exposed to this cohort of investors, how they behave, how much time they take. We have only heard it about them, but previously we haven't been actively raising from them. It's completely like a founder, when a founder is selling to a small and medium business, and they go to mid market, and then they go to enterprise. So this is like going to enterprise for us.
And I think discovering the unknowns is also what makes it most exciting.
Yeah, it's challenging, and small successes on this journey make it exciting and worth doing it.
Yeah. And since I know you as an overall person also, because I live with you 24/7, so how difficult it is for an introvert like you, like this job, the meeting so many strangers day and night. And there's this joke in our family that you would never see Siddharth speaking. And then I see a part of Siddharth that is speaking all the time.
Yeah. So I think I try to do what my role requires, right? And I think I'm always trying to do justice to my role. And as a co-founder of a fund, and responsibility is fundraise, my job is to educate people about the fund. That, and my job is not sales really, but educating as many institutions, individuals, HNI, family offices about the fund. And if that role requires me uh, to be in front of them, doing the same pitch day in day out, 365 days a year, doing it 5 times a day, so be it, right?
But I see you enjoying every bit of it.
Yeah, I
Like
enjoy
you are
every bit of
taking
it.
calls 6 in the morning before I and Kabir get up, and then you're taking calls 1 at night. Like you're so excited about each call. How do you do that? Like if you don't enjoy speaking, then what makes it exciting for
I
you?
think rather than speaking, I treat it as sharing the journey of our fund with new people. I think that what keeps me excited, and getting new folks who bring their networks, their own qualities to the fund, and the potential of collaborating along with them. That keeps me excited. So for that reason, I have to go out of my comfort zone, uh, and pitch the fund to these set of folks.
Okay. And so that, like, as we mentioned, that we're meeting so many investors across the world every other day, I would say. So tell me about one VC fund or one investor that you really admire.
I think in India, I like Axel a lot, because they have maintained their very high reputation throughout in the last 18 years since they started. First, it was Erasmic, which got acquired by Axel in the US later, and they rebranded it to Axel India. So they have always come out as super clean investors. and they have been also part of the biggest success stories in India on both consumer side and on the B2B side. On consumer side, they were first investors in Flipkart. In B2B SaaS side, they were the first investors in Freshworks. So they have spotted trend much ahead of their time on both the sides. I think that's a quality of investors to, everybody can follow the herd, right? And I think people don't make money, either founders or investors, when they follow herd. You get to make large outcomes when you can uh, be a part of a trend or a movement before it becomes the trend or a movement. Here you have to see things, imagine things in infancy, and take a bet against the herd. I think that's what Axel has done.
And this is what we are doing at
Yes.
World. And any investor you want to quote here, like you really like that investor, or what exactly you like about
I
that
think
person?
Mark Andreessen said like software is eating the world way back in around 14 years or 15 years ago. I really resonate with that because how software has become a part of our workflows, right? Most of our work is done through apps, which is software. A scheduling of carpenters happens through software. Food delivered eventually gets delivered to you through magic of software plus logistics. So I think Mark Andreessen was so right. So I think some investors are able to predict the future.
Hmm. And we also talked about repo, that the kind of repo Axel has built for them over the last many years. How important building repo for any VC fund, especially for funds, young funds like us,
I
and
think
how do they do that?
repo can't be built, or somebody can try to build repo. In investing or as a founder, when you are taking riskier bets, your true nature gets exposed, right? So if you are a very fearful person and you can't see uh, the money becoming to zero, then you should not become an investor, because you have to see failures, you have to see your portfolio companies
But
failing.
then there are things you have to get it right from the beginning, right? You can't, like, because it's not one person running the fund, it's a team effort.
Yeah, it's a
And
team
then
effort, but what I'm saying is how do you behave during failure determines your character, right? And as a person, that's why we say that, right? Operators and founders who have seen failure in their lives.
how does a VC firm behave?
Yeah, how
And
does a
VC
VC?
firm is like it's a team effort.
Yeah,
So how do you get
VC
that
firm is
right?
made up of individuals, right? And if those individuals haven't tasted failures or haven't tasted dirt or tasted zero in their life in the past, their reaction to failure would be very negative. And rather than backing the founder at the time of the failure, when the company has become zero, when the company has shut down, and being able to be there for the founder, they are blaming the founder, and we have seen it happen in the past,
Hmm.
right? Large investors putting the blame back on the founder, but nothing comes out of it. I think that the reason is, right, that these investors haven't tasted failure in the past,
Hmm.
and they haven't uh, responded well to failure.
Hmm.
So once they are seeing these founders fail, and in their failure, the failure of the founders, they are seeing themselves fail,
Hmm.
they're not able to digest it, and that's why the adverse reaction comes
Hmm.
in. So
I think being a VC firm, the least that you can do for a founder is be respectful.
yeah, be respectful, right? Because ultimately, the asset is the founder.
Hmm.
And if a founder keeps on trying, maybe on the first attempt they are not successful, but in the 10th attempt they'll be successful. But if your relationship with the founder is great, they'll always come back to you.
Yeah. And there are so many young folks who want to join VC fund. And these young folks, when they join, they have to work on deal flow. They have to talk to all the founders who are reaching out to that VC fund and working on other things also. What do you think these folks should have in them? Like, what makes them the ideal candidates for working in VC?
I think working in a venture capital fund is overrated. I think young people, especially from IITs, are super excited right after their college to go in the VC world.
Now,
Especially now, right? Because now it's become cool, or I don't know the exact reason, but it's among their peers. It seems to be elevating their reputation if they're working in a VC fund.
hmm.
But I think working as a VC fund is pure grunt work. uh, 80% of the time the managing partners are raising capital or managing their LPs, right? 20% of the time is spent in uh, 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 finding the new companies to bet on, and you have to service then your founders in the sleep. So I say that, right? If you don't have a muscle to service your founders while you are sleeping, then you shouldn't be a VC, right? So most folks are not prepared for it,
Yeah.
right? So that's why I say, right, rather than just trying to become a VC right after college because of the glamour that it's portrayed to be, it, try being somebody, like, at least try being a founder or a operator where you take large moonshots and you can fail. Because unless and until you have tasted a little bit of failure, you can't become a good VC. You can't behave great with founders because they are pitching you day in day out. And while founders are pitching you, you have to make sure that you are not on a higher pedestal with them. If not equal, you are on a lower pedestal because they are starting up, right? uh, so how do you treat on right from the first call with them with pure respect, irrespective of the idea or they are building or the scale or the traction, just because they have put so much at risk on the table, right? How do you first emotion that, you know uh, if you want to enter VCs, are you respectful of the fellow founders? Are you respectful of the journey, respective of success or
Are
failure?
you aware about the ugly part also, like the grunt work that goes into
The grunt
building a
work, right?
VC
And I think
firm?
most folks are not prepared for it. Most, especially I see right today, Gen Zs, which are recent 3-4 years of college graduates, they're not prepared for grunt work. Maybe after COVID, they have seen easy money and right, because COVID enabled a lot of online work being available, so they could do 2 or 3 work at the same time, or 2 3 gigs at the same time. Uh, Work got relaxed, money was free. Uh, so I think behavior got spoiled. People who haven't built their character before COVID, it's very hard for them to build their character
It
now.
has rather become a status symbol for some of the folks to work in a VC firm that
Yeah, it's not a status symbol. I would say it's a responsibility. It's a lot of grunt work, and if you want to become rich, I would say, uh, and if you want to take a risk, try becoming rich. Be a founder, because if you can go right 1 out of 10 times, you will hit it right. And if you still don't want to take a risk, find a company that is rising right now. Like find a Misho or a Flipkart, which is getting built right now from 0 to 1. In next 5-6 years, that can make you rich. I think being a VC is not the path to become rich in 5 to 6 years, right? We have been doing it for the last 5 years, and I don't think it has
Yeah.
made us money, but we do it for the pure love of
It's a
it.
patience. It's a game of patience.
Yeah,
Right?
it's a game of long term patience and uh, uh, a lot of uncertainty, right? And you only make
And
money.
like since we have talked about the people that who want to join the VC firm, here is something we want to share, that we think that it is a lot of grunt work, lot of uncertainty. You don't know when you will be making money uh, at the early stage. So there is only one luxury that you have, is you can choose your peers.
Yeah, you can choose your peers, right? You can choose the founders that you want to work with day in and day out. I think that's the only luxury that you have.
Luxury we have as fund managers, right? And we also talked about relationship part of VC, that how do VCs develop their relationship with their founders, and there are moments that cause some kind of friction in that relationship, like founders sharing that they are pivoting. So there are lots of videos on YouTube that teach people, founders, how to share this news with your investors. So how do investors generally react when people, because they along with the founders, they also invest in the idea, and then after some time founder comes and says that they are pivoting. So how does generally investors react that we have videos where people are teaching how to share this news with your investors?
So I think first of all, founders should not be required to prepare for it. They should share it as transparently that they don't know, and they're not supposed to know it all. And pivot is a part of the journey, right? All large success stories like Slack, right, which started as a game and then became the messenger. right? They started as pivot. uh, so it requires more preparedness. I think VC should watch the video how to be prepared to to deal with pivots rather than
Founders watching
yeah,
the
founders
videos. Yeah.
watching these videos. And that's why I say it's very important for VCs uh, to have been operators or founders themselves, because unless and until you have gone through the journey of pivot yourself, how would you empathize with a founder?
Hmm.
Right? It's very 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 tough.
What are the other interesting startups that were building something else initially when they started and then they pivoted and
I think some of our portfolio companies is SpotDraft, right? So Shashank, Madhav, and Rohit, when they started as a accounting software for small and medium businesses, and then they later pivoted to a contract lifecycle management software. And in the earlier avatar, they were selling it to the likes of Wipro, very large enterprises, and each enterprise required customization, right? And they realized that they're not building a true product, and then they pivoted to the current version of the contract lifecycle management for you know for mid market enterprises, right? So it took them 3 to 4 years of hard pivots before they reached the current version that started to work. And they have been scaling like 3x year on year since the time they figured out the right product, the right market, since 2020. So as founders, if you can persist the first 4 5 years of hell, right, then you can see the growth in your venture. It's not guaranteed still, but there's a shot at it.
hmm. Since we have mentioned about our portfolio companies, what are the other companies that are doing some exciting work that we should be sharing with our audience?
For example, Vijay Rayapati, Kiran, and Parsu, who are co-founders of Atomic Work. That's one of the companies. I'm uh, seeing that they can become the next Freshworks or even bigger than Freshworks from India. The large VCs in the US have said that this is the best ever SaaS company that has come out of India, and it's surely because the founding team is so good. Beyond the founders, each member of their 30-member team is such that they can, if they themselves start a company, they'll be able to raise a couple of $1 million just based on their own credibility of what they have built in the past at Freshworks and Nutanix and the other companies like ThoughtSpot that they have worked at. And the second thing is that they are uh, trying to disrupt such a large incumbent, which is ServiceNow. ServiceNow is a $8 billion revenue company, $8 billion, growing at 30% every year on year, almost valued uh, in public markets, mostly at 100 billion or more. Right? When a founder, such a good team, is trying to build a product to disrupt such a large incumbent and has some early success in it, right? There's a real shot that they'll build a very very large company if they are able to figure out the right product and the right GTM motion for it. And because these are founders who have taken company to IPO previously, which is Freshworks, right? They know how to scale. I think the only challenge for them is figuring out the right product market fit,
Hmm.
which the early signs have shown that they have been able to do it.
Hmm. Yes, and like let's also discuss the journey of Infeedo because like the founder story is amazing and the work they are doing,
Yeah.
and because Infeedo is we invested in Infeedo when we were just starting out, right? So that's there is one more reason why Infeedo is very special for us.
Yeah. So I think Tanmay started Infeedo in 2016 when he was just 19 years old. I met Tanmay in 2019. Uh, and 2020, when they were raising their first round, they had a term sheet from a tier 1 VC who backed during COVID time, March 2020. And then, I, Tanmay,
Who backed out?
the tier 1 VC who backed out,
Backed out.
right? I got an opportunity to put almost like from the fund $500,000 in Infeedo, and they were very early. But I think what they had early on was a great product, and they were building an AI first product that was helping large enterprises like Make My Trip, Ola, reduce employee churn, right, and improve the culture index in an organization through using an AI chatbot. It was very early before that. Current AI wave is in 2023, 2024. They are building it in between 2016 and 2020. So you can think of they were much ahead of their time.
Hmm.
And they kept on executing it even after raising funds. They have grown 2x almost year on year. today regarded as one of the top HR tech SaaS companies from India, like just after Darwin Box and the likes.
And one more interesting thing about them is father son duo
Yeah, yeah. So,
running
so
the
a lot of
company.
VCs backed out because they said they don't invest in family, this and that. I think they have proven everybody wrong. Earlier, people used to say they don't want to back husband and wife, and Varun and Ghazal from Mama Earth proved them wrong. So now people are okay backing them,
Yeah.
right? So I think all these misconceptions are in VC heads only.
Yeah. And the story of Karthik, like uh, Karthik from Gallabox, he is also an amazing founder we have bagged, and he started when he was um, almost 50-year-old, right?
Yeah, he was more than 50 when he started Gallabox. And I think the most impressive thing that I have learned from Karthik is whichever company that he worked at previously, right? Be it Sifi, be it Sulekha, be it Bharat Matrimony, he worked it as if his own name
Was
was
there
on
on
the
the building,
company,
yes. Yes.
right? So, so
That
they,
kind of high ownership and high integrity and
yeah,
like loyal to your company. So I was also thinking about it the other day that there are people who think that they can be careless when they are working with some other company because this is not their company, right? I think that kind of attitude won't serve you well in the long term, because when even doesn't matter if you're working with a company for 2 months or 4 months, the kind of work you do during that time, the kind of attitude you show leaves an impact and serves you in future, right? Good or bad. So I think the best quality that I have seen in people is their behavior when they are working with organizations in the tough times, right? How does it change? So you can decide not to work with a company, but when you are working, I think you should be giving your
I think my
100%.
learning is people who have a high bar for themselves, at least on their behavior, which wherever they are working, they do well in life.
Hmm. So what are the 5 6
I think this
top
is the thing
qualities
that I
that
learned
people
at
should?
Amazon when I was at Amazon Web Services. So these are people with high ownership. These are the Amazon leadership principles. They have high bias for action. They're continuously earning trust with internal and external stakeholders, right? Uh, and these are people who are humble. They are respectful, and they are coming out with solutions. They are not just putting out problems, right? And these are people who, for whom they always work like their name is on the company. Uh, so so these are the few qualities I would say, the kind of people, irrespective of whether you have skill or not, that do well in life.
I think this is the bar our founders have set up for us.
Yeah,
That you take example of Vijay Rayapati from Atomic Work, Kshitij, Karthik from Gallabox, Shashank from SpotDraft. You meet them, they are so humble and they're doing some exciting work. They always have some kind of exciting updates, yet they sound so humble. They'll small things about their the way they operate. I think this is what makes them special, truly
yeah,
special.
I think
And I think the bar they have set for us, it's not just the bar we see when we look for founders. This is what we these are the qualities we look for all the people we want to work in future.
absolutely. I think that's the joy of being a venture capitalist, right? You get to work with so many amazing founders that your learning is so high. As a founder, you are extremely focused on your own venture, so it's very tough to have
And also the work is not very exciting every day, right? So working with these people makes it exciting,
yes,
right? Like you stay motivated when you work with hungry people or people who have higher integrity, who are ambitious yet humble,
agree.
right? Do you think uh, if a founder doesn't choose us, what would be the reason?
I think mostly, if I have seen, if a founder not choosing us is they became aware of us much later on, uh, after the round has got built. I have never seen a founder that when the round was getting built and both founder and the neon were eager to partner, we couldn't partner. So I think it the reason to not partner would have been delay on our part of not reaching the founder early on in their journey,
Hmm.
much before they started building their round.
Okay. And is there any question that you ask all your potential founders?
I asked them, right, uh, their thought process on 0 to 10 mil ARR journey. One reason it's very important because I was not able to achieve that, and that made me dependent on VC journey funding in my journey. And when I couldn't get the Series A funding, I had to sell my company. So I want my founders to reach 10 mil ARR, and that's why I want to be very sure when they are starting up, have they thought thoroughly about it. Because once they reach 10 mil ARR, they're almost failure foolproof, right? And then it's up to them whether they want to sell the company at 10 mil ARR or they want to build for a 100 mil ARR company. I think even if they sell at 10 mil ARR, they would have generated great returns for themselves, their employees, and all their stakeholders. Right? I have never seen a company failing because of external funding at 10 million in annual revenues. So that's why uh, our entire effort is focused on making our founders reach there. And when we before we decide to partner, we ask them this thorough question, and we are evaluating them from.
Then there are founders who pivot like,
No, they can pivot, but but at least when you start on a journey, you need to have a framework of how I'm going to there reach a certain milestone, and is that milestone important or not in my journey. So you can change your way, but at least whatever way you change, your milestone is not changing. That I want to first build a 10 million ARR company. Right? So I think people who already have built a framework or thought through at least the first milestone, which is 10 million ARR, they are much more likely to succeed than people who are just hitting in dark and thinking that, hey, if I throw 100 darts in all directions, one dart is going to hit.
so people who don't have clarity to this
Yeah,
question, they
people
are
who
not.
don't have clarity on this question, they haven't even, they are, they I think, doing injustice to themselves, because having given so much precious time and energy and sacrificing their life, their family's life for a startup.
Like, what are the things founders should prepare before pitching to a VC?
So, for example, let's say I'll make it a checklist of 5 to 10 things, right? And this is irrespective of whether you are building it for a pitching to a VC or not. This is your business, right? The first is uh, what's the market segment that you are building in? Have you researched that market segment thoroughly? What are the various players in that market? What are the various workflows or problems that they are trying to solve for? Then have you spoken to enough customers in that market and spoken to the customer about, a single deep repeatable pain point that, let's say, 100 of potential customers face, uh, and then do you have a wedge uh, that, hey, if I build this, it solves the customer problems in this way, and this is the exact value that the customer is going to get. So people, I think, mostly I've seen them making this mistake. They don't know what value the customer is going to get, right? And they are not able to quantify that value. And if the customer is going to get X value, uh, how much can customer pay to them? Because they have, if you have generated enough value for anyone, they should definitely be able to pay you, right? Because value based world, right? And then if I have got, let's say, 100 customers, what is the motion that I can use to make thousands of customers, educate them about the problem and make them aware about my product? So I think these are the basic things required in a business, with or without VC pitching, that a
And
founder should be aware of.
so if I have to list three metrics that you track as an investor, what would be
I
those
think the most
metrics?
important metric that I track is uh, what's your annual contract value, uh, which is like how much a single customer pays you annually. For us, I think if you can't have a customer paying you repeatedly $100,000 annually, it's very hard to build a $10 million annual like $10 million revenue company, right? Like, either it's a very different route, which few companies have been able to crack, which is PLG and charging thousands of users, very small amount, but I don't believe in that. The other route is the ACV is the first part. The second is what's your current annual recurring revenue, like total year revenue, and even if it's zero, that's fine. What's your path to the first $1 million in annual revenue, and what's the unique uh, wedge that you have to reach out to your customers? How do you know where are your customers sitting? Who is the right profile? Who is the right buyer sitting within an enterprise or an organization? And what is your method to reach out to them?
Hmm.
I think this is the clarity, the questions that we ask from a founder.
Okay. And if founder is reaching out to certain set of funds, that what are the metrics they should be tracking
So I
for
think
funding?
so these are the same metrics that the founder should be pitching in their first slide deck. That hey, this is the large market, this is the unsolved problem in the market, this is the unique distribution model that I have, and this product solves this one problem in this way.
Okay, I think you have already answered this question, that how do you decide to invest in B2B SaaS startups, right?
Yes.
And in this journey, because this has been a unique journey for you, you were a founder that when we started that we didn't have many VC funds back then, right? So if you can name like 3 to 5 people who really helped you in this journey, reaching here, and what kind of help uh, they provided.
So first is Kshitij, right, who is the head of investment committee at Neon. He is the founder of Jovio. So he partnered with me when fund two was almost zero. Then we raised $10 million fund together. Uh, I think getting Kshitij really elevated the level of the fund. Like founders look to speak up to him during our investment
Yeah, I
committees.
remember in the launch event for Neon, everyone was asking, "Where is Kshitij? Where is Kshitij?"
Yes. I think second, I would say Pallav Nadhani, who really helped me in the fundraise uh, for the fund too, connected with various folks, right, and connected with Vijay Rayapati. And third is Vijay Rayapati himself, right, who went out uh, batting for Neon to every conversation that he went to and backed us completely.
These are busy people. These are like all the names you have taken. Kshitij, he's like working all the time, and Vijay and Pallav. So why do these people help people like us? Like,
I
and
think
how do
if
you
you see
get
the
the help from these people?
common thing, common theme among these people, they are all founders, right? And these are all folks that want to create value in the world, and they just don't create like value by only building the product. They help, they create value by enabling other people. So you have to be a person that people like these, right, they can completely believe in you, right? You have to be honest, you have to have very high integrity, and you have to deliver on what you promise. So if you have these set of qualities, you will find founders who want to back you.
And you also have to figure it out. How do you continuously, uh, you know, keep adding value to these people, right?
Yes.
So, how would you define these relationships? These are not your friends, I would say, because these are very busy people solving the, you know, um, high level problems, but they are there when you need them.
I think
So,
it's a more of a mentor-mentee relationship. Whenever I have a problem, I go to them, right? And I'm also always thinking that how do I add value in their lives? It can be a connection or it can be anything, right? A hiring.
so it is so important for anyone who is starting up as a founder, as a fund manager to build meaningful relationships with people, not just your LPs and founders that you invest in, but these mentors also. So how do you find them? How do you add value to them and then maintain the relationship with them?
I think as Naval Ravikant said, right, networking is useless, right? If you go to events for networking, it's completely useless. If you build something meaningful, in our case, it was podcast in the fund, uh, and if you build something and you
Right people will find
the
you.
right people will find you. Obviously you have to reach out to hundreds of people to find these 3 4 right people that will back you. If you build the right product, uh, you are genuine, you're honest, and you're continuously doing outreach.
Amazing. And is there any notion that has changed in the investing world? Because like we now have so many young funds, and how do you connect? Like we are raising from people who are sitting in the institutions and people who are based in US. We are raising fund from them, building fund from India. Is there anything that has changed over the period of time since you started, or in general?
I think it's become a founders market rather than a VC's market. When I was building, my own company, then I was going after VCs. Very few VCs used to entertain or give meetings, and when they used to say no, it wasn't clear. Somebody, a VC would call me like 50 kilometers away just for 10 minutes, right? Uh, so I think VCs used to waste a lot of time. I have seen all of those.
I think you wouldn't do that now if
Yeah,
you
I've seen.
start something and someone calls you.
Yeah. So I've seen all of those investors who didn't value founders' time weed away. So the ecosystem is filtering, self-filtering, and
Hmm.
it's a very small ecosystem. So your repo goes a long way.
Hmm.
So that has changed, I think. And you can't build a repo. It's your character. Either it's there or it's not there.
And what's that one thing that we should continue doing that makes us the best place for founders?
I think
Like if you have to point out the one thing about Neon that we get it right and we want to keep doing it.
one area is if we are able to always quantify that, how we are able to add delta and quantify the delta that we are able to add between 0 to 10 million ARR journey of a founder, what has Neon contributed, and the founder is able to vet and wholeheartedly say to the world that this is the delta contributed by Neon to their journey. I think, and if we just keep a north star towards that and keep on increasing that amount of delta toward in the journey of each founder that we back, I I think we would have made our mark.
And
It's a continuous journey. There is no destination.
especially when you're building an
Yeah.
institution. I think it's not just with our fund, it's just with our podcast also. We never say that we will keep doing the podcast until we raise $50 million, and we never say that we'll just keep hosting the founders because founders get us leads or investors get us
Yeah.
lead. Whatever that sparks our curiosity, we will do that.
Yes.
So I think that's really important for us to keep going, because otherwise it's a tough journey.
It's a tough journey, I think, both for founders and for us, because we are founders of the podcast and the fund. So both for you and me and the team that, right? Then the North Star should be that how do we elevate our bar with each episode and with each founder that we back.
One interesting question, because I think the conversation was more about investing. So just one question that is fun for you also. If you are not an investor, then who would you want to
I
be?
think I'll definitely be a founder. Or if not a founder,
This answer
and if
keeps changing for Siddharth.
yeah, and if not a founder, then definitely somebody. And if I had the enough money, somebody would traveling and exploring the world, traveling to a different place each time.
The last time I remember, the answer was being a monk.
A lot has evolved.
Cool. It was very nice talking to you, Siddharth. And one of the rare times when you are so patient with me. So really appreciate that.
So thanks, Nancy, and I enjoyed this conversation so much.